Either very am I rich, and I know you're thinking this is another Groundhog Day video. It's not true. Yes, it's snowing here where I live, and that's crazy because it's so late in the year, but it kind of happens a lot in late April, so it's not really that surprising for me. Anyways, back to the real story. Today, yes, I am going to talk about ExxonMobil. ExxonMobil, ticker symbol XOM, is an oil company, and you've probably heard of it, or at least part of one of its parts, I guess I should say. And I know what you're thinking, why ExxonMobil? Well, let me tell you, and yes, this has to do a little bit with my whole banana story, but I'll get to that later. So first of all, what is ExxonMobil? Yes, they are a huge oil company in the world. They're, one of the top S&P companies. They have been around for a long time. They go back to the days of the Standard Oil companies of New York and New Jersey, and the Rockefellers. This company, was broken apart because they had a monopoly into several different companies. Standard Oil was, and Exxon and Mobil at one point, they were companies that came out of this splitting up. Later on, joined up. They also had they have other brands such as Esso. Esso is just another way to say SO for Standard Oil. And they also have, newer companies like XTO, which used to be Cross Timbers Oil, and many, many others. This company also owns large portions of other oil companies. For example, Imperial Oil in Canada, they own 70% roughly. They own 30% of RasGas, which is a joint venture, I think, with Qatar. They also have joint ventures with Royal Dutch Shell and many, many other things. They're involved all around the world. Any major oil project, they often are well aware of it, or might even have their hand in it, even if you don't even see some part of ExxonMobil being advertised there. So they are definitely at the top, or one of the top players, if not the top player in the oil market. Now, they might not be as profitable as something like Saudi Aramco, but they are a company that is in that realm. And as far as a global reach, I'd say they probably have the biggest global reach for maybe not the best oil sites in the world. Those are usually taken by smaller, local country players, maybe not small players, but something like Suncor, which is more Canadian based for the oil sands, or Saudi Aramco, which controls a lot of Saudi Arabian oil. But they're still involved in a lot of these big projects around the world, and they have a major foothold in the oil industry. So that's just a little bit of background of them. But if we get into the financials a little bit, currently their stock price is sitting at $80.24. They did report earnings, I think, last week, and they were a little bit dismal, not amazing. I think they might have missed a little bit. So that gives their PE ratio an 18.4 and a forward PE ratio of 17.6, which 18.4 is, depending on how you look at the industries, this might be a little bit low, or at least around normal for most companies. You're somewhere between 18 and 22 is my view, depending on the industry. Some are much higher, some are lower, but that's kind of general. Price to book ratio, they haven't come out with all their equity numbers yet, but we're looking at something around 1.8 right now from the previous numbers. And then their dividend, it is increased, so it should be about 4.3% with the given stock price. Now, its 5-year growth rate for its intrinsic value is something that is not that exciting. It's 0.6% per year. I think in the last, if you include the 6 years, it's like 0. It's just about flat. Even if you go back 12 years, you could have got this for a very similar price in the stock market. So they really haven't been doing a lot as far as their stock goes and their intrinsic value goes. But they're still a very well situated company. They have a decent cash position. They're very entrenched throughout the world when it comes to the oil industry. So what do I see interesting about this company? You know, if they're maybe kind of not doing as well on the earnings side as expected, why do I think this is exciting? Especially when you're looking at an oil company. People want oil to be on the way out, maybe because of climate changes and pollution, and maybe they think, you know, this is it was a great company, you know, back in its day, maybe up to the 80s or 90s, but then now it's, you know, why do we want to look at an oil company? And that's maybe fair to a degree. I still think there will be a need for oil, and it's true. That's what that's what ExxonMobil also thinks. ExxonMobil also thinks that you know, the demand for their oil is going to continue at least to 2040. So yeah, and peak oil, I don't think they found there's a peak of oil yet. They keep finding new reserves. You know, there's new ways they can frack and things like that to get more oil and gas. So it's not really surprising that this company can still produce oil. Now that said, if oil does go on the decline, I mean, maybe that's something. The other thing is ExxonMobil, its growth vectors, they might be a little bit limited, is what probably a lot of people are thinking, because they're so widespread. Unless they find massive deposits of oil, which a lot of the major ones have already been found, it's hard to imagine how much more they could do. Now, yes, they found a couple large deposits, maybe off the coast of Guyana, close to Venezuela maybe. But is that really going to be a great play for them or not? That's, you know, we'll have to see, and whether it's enough to keep the company massively profitable, hard to say. But I do see it as a company that's going to be around for a long time. Maybe they'll transition towards, if there's less and less oil to find, maybe they'll transition to more and more of a dividend stock. I mean, they're doing okay for 4.3%, and it does grow the dividend. It's not really that bad for a dividend stock. So the positive case scenario I see here, and now this positive case, the reason specifically I'm looking at Exxon, there's a lot of oil companies out there, and yes, they could do well, but a lot of it is tied to the price of a barrel of oil or gas. But ExxonMobil might have a different advantage in the coming year or two. And so when we look at the price of oil, for example, I don't know where it's going to go. I mean, it could go up, or more likely it's either going to stagnate or drop. And the reason I think that is because you know, every time the oil price goes up, everybody else starts to drill more and more, and you basically have just as much supply as you need, or a little bit more supply than you need. And so then you know, supply and demand, you basically have more supply than demand, the price is going to go down. So I feel like this price is going to stagnate for a while. Now, there might be some factors that push it up, and that could be an added benefit, but there could be some factors that push it down. And so I'm a little bit unclear on which way it's going to go. So a lot of oil companies are probably more risky, but when it comes to ExxonMobil, they are the world's #1 refiner, and they refine, they have capabilities of refining certain fuels and maybe lubricants or something that other companies aren't doing on as big of a scale. So I think they have a bit of an advantage, especially when it comes to my shipping container thesis. Now, in the past I talked about the banana industry, which led me to the shipping container industry. And the shipping container industry, if you haven't watched there, maybe I'll put a link for it, but basically there's a rule coming out from the UN which is trying to encourage shipping companies to switch over to a more friendly or less polluting fuel, or at least install scrubbers on their ships, which is very expensive. So to switch over to a new fuel, that's going to happen like January 2020. To do this, they're going to have, a lot of them aren't ready for it, but certain ports will be ready because of refineries maybe closer by. And so big fueling areas, you would look at companies that are able to produce those fuels for them, something like a jet fuel anyways. This would be Imperial and maybe a few other big refining companies. But Imperial, being the biggest around the world, they have a good chance, and they're also, they have a good control of the whole oil industry. So I see that they could really profit from this rule coming down the pipes. And because of that, they really have a good chance of exceeding the earnings of other companies, just regular oil companies. Because if the price of oil goes up, it'll also benefit ExxonMobil. But if the price goes down, I think the price of the fuel for these container ships, which is huge, I mean, this is a huge market, it's also going to go up. And even, if you take this bunker fuel that they used to use, it's going to have to be refined to a better product. And so there could be a glut at first, which could hurt, I don't know if it's the exact same fuel as planes, but if it is, it could hurt the airline industry. I might talk about that later, but it will be a bigger expense, and there could be a shortage of supply for these container ships. So the refiners that can produce that will be able to charge a bit of a premium. And so I see 2020 as a very profitable year probably for ExxonMobil. And there are some estimates out there. If you look at the earnings by year that are kind of forecast, some of the higher end estimates actually see them going from, I think they have an earnings right now of 4.2 or 4.34, something like that, dollars per share. But some of the forecasts have them up to $10 per share, which is pretty high. I don't know if they can maintain that forever, because eventually other refiners will come online in other countries that maybe are not prepared, and they'll start to have the right fuels in place, and the extra surplus or the extra kind of price increase might not be there for that forever. But that little peak in the earnings for Exxon will help them, and I kind of think over the next 3 years they could easily average $6 or $7 per share, which could increase their share value quite a bit. And this is why I kind of think it's cheap. So I'm looking right now, I think if you were to look at the company, $80, maybe it could go as high as $90 with its fundamentals the way they are, but it has no growth, so it's kind of a fair value. But the reason, when I look at it, if it is going to earn these increased amounts because of its refining capabilities, and I think you could make an argument that it could be worth like over $115, which is a significant increase from 80. So in the next 2 years, you could see this go up quite a bit. Now, whether it's going to happen or not, I don't know, but that's kind of the positive thesis. And even that's just a baseline positive, because on top of that, what if oil did go up in price? If other oil demands go up, then ExxonMobil is just going to do even better than that. And the downside scenario, well, the downside scenario is maybe the shipping containers, maybe people do get on board fast enough and they don't earn that much more. Maybe, the UN proposal doesn't come to fruition. Maybe they delay it when it comes to January 2020. They say, oh, the shipping container industry is not ready, so they delay it. Who knows? I don't know that that's going to happen. Seems a little unlikely, but there might be a lot of companies out there who aren't going to participate right away, and so the demand might not be as strong as that it could be. And also, the oil price could go down so low that even this extra profit that they make might not be enough to kind of float ExxonMobil compared to the rest of the industry, and it could tank along with the rest of the oil industry. So these are, the bad side scenario. I don't know that, in my view, personal view, I don't see that as a hugely likely scenario, but it is a potential. And could they go bankrupt? I see that as very unlikely. Usually the other companies will go bankrupt before them, and then they'll acquire, the good parts of them. So I don't really see that as a huge issue. As far as oil fields that are drying up, ExxonMobil is very good at taking an oil field that's a little bit less profitable, putting it onto a more junior company that is trying to eke out a little bit of profit out of that, and they'll go for the bigger fish and kind of focus on that. So I see them potentially, bad case scenario, just stagnating for a long time, which they've been doing already for 12 years, or they're going to have, 2 or 3 years of really exciting earnings growth, which is kind of a growth in their company. And who knows if they're going to diversify after that. So that's kind of my positive and negative thesis on ExxonMobil. I'd love to know what you guys think. Do you think ExxonMobil is very interesting or not? Do you think it's great? Do you think the shipping container industry is going to benefit ExxonMobil? Yeah, I know maybe it's not going to go up as much as Maersk could, but I don't know, you know, maybe it'll go up 40% in the next year or two. We'll have to wait and see if that actually happens. But let me know what your comments are. Let me know. Otherwise, thanks for watching, and we'll talk to you in the next video.